Morningstar.ca, I'm Nikita Arora. Karl Cheong of First Trust says millennials and ETFs are a perfect match. He's here today to tell us why. Thanks for joining us today, Karl.
Thanks, Nikita.
So talking about millennials, why don't we start by discussing who are millennials and why does appealing to them matter?
So aside from a generation that's obsessed with reality TV, millennials are actually the largest living population in the world and in history. They represent close to 27% of the overall North American population, 9 million alone here in Canada. But what makes it really appealing from a consumer perspective is if one, their incomes are rising, their wealth is growing, but they stand to inherit one of the largest intergenerational transfers of wealth from baby boomers to millennials. There's estimates close to 36 trillion will transfer over the next 30 years. So it is pretty good to be a millennial despite some of the lower average wages than historical generations.
Okay, so besides inheriting a lot of money and being the most populated, so what are the other differences between millennials and the other generations?
I think each generation is shaped really by the world they've experienced. So when you look at millennials, they've been shaped by huge positives like the rise of digital media, technology, the internet, but also huge negatives. Terrorism attacks, we see that almost every week, global warming. From an investing perspective, millennials have had a ringside seat for the tech crash in the early 2000s, if they were old enough, or the financial crisis in 2008. Even if they didn't get impacted directly, they got impacted indirectly through relatives or parents. So by nature, millennials tend to be more risk averse. And who can blame them? I was just speaking to a millennial investor yesterday who holds a very, very defensive portfolio of bonds and gold. And part of the reason why is because he doesn't have trust or faith into the system or Wall Street. And that's a common theme among millennials.
I think I can agree with you as a millennial myself. So talking about millennials and passive investing. So why do you think that ETFs and millennials are a perfect match?
It's a good question, Nikita. With millennials, they're embracing ETFs for a variety of reasons. When you take a look at a recent Charles Schwab survey, it shows that 41% of millennial portfolios are comprised of ETFs, and that's compared to 21% for all other investors. Furthermore, 70% say that ETFs are core investments, and 61% believe they're going to be investing in ETFs more in the future. And it's not really a surprise to me because when you think of the ETF structure, it's sort of a millennial itself. It just had its 25th birthday last year. So while our parents have grown up with mutual funds through the 70s, 80s, and 90s, millennials have grown up with the growth of the ETF industry from a dead start in 1990 to over $3 trillion today. And history has shown that younger people are able to adopt newer technologies faster. I could even think anecdotally, my 3-year-old daughter is all over my smartphone playing on YouTube, while my mother is still struggling with email. So when I look at ETFs, it's really just a disruptor in the financial services industry. It's like an Uber or an Airbnb. But when I look at why they're a perfect match, there's 3 reasons I think that really appeal to millennials. The first I would say is the transparency. So we're in a generation, a social media era, where Snapchat and Instagram, where everyone's broadcasting their lives to the world. So the transparency of ETFs might be appealing to a millennial because we display our holdings every day. You know exactly what we hold versus a mutual fund that only displays a fraction of their holdings on a quarterly basis. The second I would say is the low cost. It really appeals to the frugal mindset, I think, of a millennial. We've grown up in a generation, for example, that's shopped on eBay and Amazon looking for the best deals. In the financial product universe, it is very, very difficult to find a better deal than ETF structure. And that 26-year-old that's binge watching Netflix can get the same ETF at the same cost as the Harvard Endowment Fund. So it really levels the playing field. And then lastly, I'd say it's in an era of real instant gratification, the intraday liquidity of ETFs might be appealing because you can buy and sell these ETFs on a daily basis as opposed to a mutual fund that you have to wait till the end of the day.
Fair enough. So, but given that there is so much variety and there are so many options to choose from, what are some of the top ETFs that you would recommend for millennials today?
So I have a few, and one is more for the core part of the portfolio, and two, it's really what you've seen is a lot of manufacturers are trying to cater to this group, so more kind of satellite plays. So when I think of the first idea, the First Trust Tactical Bond Index, it's something I hold as a core part of my fixed income portfolio. This is an ETF where you can get tactical exposure to the emerging markets, high yield, corporate debt, so thousands of debt securities that would be very difficult for you and I to replicate ourselves. Secondly, the goal of this ETF is one, to preserve capital, again, very important to millennials that have seen 2 market meltdowns, and 2, get as much yield without taking on, without violating Rule 1. The second one, again, it's more a satellite play. It was targeting millennials specifically. It's the exponential technologies by iShares. Now, this is an ETF that invests in 9 different fields, everything that's supposed to transform our way of life. So robotics, nanotechnology, big data, for example. You'll see names like Tesla, First Solar, Netflix, for example. It's a global ETF. It charges about 47 basis points. Again, this is more of a satellite holding for a millennial because it's going to be quite volatile. The nature of exponential technology is that they're going to be big winners and big losers, right? So to actually pick those winners and losers is going to be pretty difficult. So one way to participate in this space in a diversified manner is this ETF. And finally, I'd say it's the social media Global X ETF. Now, this is an ETF that targets social media companies, 30 of them approximately. And you'll see very, very familiar names, LinkedIn, Twitter, Facebook, for example. And I think what this does actually, it speaks to the way millennials want to communicate and receive information. You know, again, anecdotally, when I speak to my mother, she wants a phone call. She welcomes hard mail. You know, there's a lot of news recently about Canada Post. The only reason millennials know about Canada Post is because that's how their Amazon packages arrive, right? So, you know, I think, again, this is more of a satellite holding of 30 names because it's more of a niche play within that space.
Yeah, that's very good. And also I think that millennials can relate to it because, you know, these are the companies that they're participating in all day long, you know, whether it's Twitter or LinkedIn or Facebook. So in a way, they can indirectly be a part of it by investing into these ETFs.
And they all make a lot of sense from my perspective.
Yeah, they do. Well, thanks for joining us today, Karl.
Thanks, Nikita.
For Morningstar.ca, I'm Nikita Arora. Thanks for watching.